We had an interesting week last week. The Fed cut rates by short-term rates by 25 basis points on Wednesday, and across the curve, Treasury rates have done nothing but go higher. The dissension is growing at the Fed board. We had one governor call for a 50 basis point cut and one call for unchanged in terms of short-term rates. Jeff Schmid was the governor who dissented and wanted rates held steady. He was joined in speeches later in the week by Lori Logan and Beth Hammer. Chris Waller joined Governor Marin in calling for additional rate cuts. So going forward, it's going to be interesting to see what happens in the Fed at the Fed meetings. Chair Powell threatened to pull the punch bowl away in December, saying that a rate cut was not a foregone conclusion, and the market reacted accordingly. The Friday before the Fed meeting, we had over 100% implied probability of a rate cut at the December meeting. The Friday after the Fed meeting, that implied probability was 35% lower. Also, Scott Bessent announced the five finalists for a Fed chair. They include Chris Waller, Michelle Bowman, Kevin Hassett, Kevin Walsh, and Rick Reeder from BlackRock. Why he'd want to leave BlackRock, I have no idea. There can only be one, so let the betting begin, and we should know in December who will be Chair Powell's replacement. Also, in this week's weekly commentary, a client asked us a question as to why we use such long-term time series. I think you'll find it of interest, so take a look.